Are you still stuck comparing NPS, PPF, and EPF to find the best option for your retirement? What if I told you this approach might be completely wrong? Yes, you heard that right. Comparing these head to head could be doing more harm than good to your financial future. Curious? Let's dive in. Hi there, welcome to holisticinvestment.in. Today we are uncovering the truth about NPS, PPF, and EPF. If you have ever wondered which one is better for retirement, stick around because we are breaking down how each of these can play a crucial role in your golden years. And hey, if retirement planning feels overwhelming, don't worry. Hit the link in the description to schedule your free consultation and get expert advice today. First, understanding the basics. Let's start with this. Would you compare apples to oranges? Sounds silly, right? That's exactly what we do when we pit NPS, PPF, and EPF against each other. NPS is a mix of equity and debt. Think of it as an adventurous cousin. Higher risk but potentially high returns. On the other hand, PPF and EPF are your safer and stable friends. Pure debt products offering predictable government-backed returns. So let me ask you this. Shouldn't the question be, how can these complement each other instead of which is better? Second, the risk factor. Here's a quick reality check. Risk isn't it one size fits all. NPS with its market-linked growth carries both equity and bond market risks. But EPF and PPF, they are like the safety nets, no bond market volatility here. And yet, did you know that even PPF has a unique risk? Its interest rates change quarterly. Now, isn't it that something most people overlook? Wouldn't it make sense to use the higher growth potential of NPS to complement the stability of EPF and PPF? After all, isn't it retirement planning about balance and not extremes? Third, taxation, a game changer. Let's talk about taxes. Did you know NPS allows 60% of your retirement corpus to be tax-free, but the remaining 40% must go into a taxable annuity. Meanwhile, EPF and PPF offers completely tax-free maturity. Now, wouldn't that be a big plus for something looking for predictable returns without tax worries? The lesson here, don't just chase returns. Think about how taxes could impact your net wealth. So here's a big question. Are you looking at these products the right way? Instead of asking which one is better, wouldn't it be smarter to ask how can I use all three to build a diversified retirement portfolio? Use EPF and PPF for stability. Your DEF foundation. Use NPS for growth. Your equity booster. Together they create a balance that works for you, not against you. Ready to build a retirement plan that truly works for you? Click the link in the description to book your free consultation today and take the first step towards your dream retirement. Remember, your future self will thank you. If you like this video, click like, subscribe and share it with someone who needs little clarity on retirement planning, and see you all in the next video. If you have any doubts regarding this or any other financial decision, don't hesitate to book an appointment with our financial experts. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like. If you are new to our channel, please do subscribe. Thanks for watching.